Yo, what's going on, everybody? Today is Monday, the 7th of June. My money is still in purgatory. Tomorrow, please. Please, I hope that it is free, dude. It is, you know, I've been streaming live on Twitch and talking and still, doing plays. But all the plays we're gonna look at today, I didn't even take. And because there are so many of them, because I was here till noon, um, I I'm just gonna go over the winners. I think we had 3 or 4 losers as well, and then 5 or 6 winners, something like that. But yeah, we'll go over them. I'm hoping that I'm back to trading tomorrow. If not, probably Wednesday. But I don't want to have to just trade large caps on my firm account all the time. But we'll see. We'll see. Maybe I'll just have to focus more on that. But anyways, we'll go ahead and get started. It'll be a short one today. I'm obviously back home, so you guys don't have to worry about the poo-poo of the audio quality like on the last one. So RMED was the first thing I called out. I actually was discussing it in pre-market. Now I didn't call any plays in Discord because again I wasn't trading today. So the only plays I called were on Twitch. But because I didn't call any on Discord, I figured that people who don't watch my Twitch videos but do watch my YouTube would still, benefit from some of the discussion that took place while we were doing these on the Twitch stream. So the first one was at 8:30. RMED. It was actually a little earlier than that. 6.7 to 6.54. 6.7 to 6.54. So yeah, this ended up being a really solid zone. You could have taken in pre-market for some decent action. And then you could have taken again, at the open for what ended up being a huge move. I think it actually halted up here as well. I think it halted on this candle right here, which is why you see some of that gappage. Stop loss could have been something like 629, risking 25 cents or so. Profit target could have been high as this. So you would have made at least 50 cents. Could have taken it to a new high a day. I mean, you technically could have held it for well over $1, over almost $2, in a perfect world. But let's talk about what these levels are based on, right? You come over here and you see that top wick here, body. That's how I based it. I kind of talked about it on stream while I was doing it as well. You got top, body on the 5, all that good stuff. And as this was taking place, you could see here, as the move was getting filled, you could see the reaction on the 10 to the 20, wicks right up out of the zone, huge eruption, taking out all these key levels from pre-market. So that is pretty a significant move all at once right there. Just this single candle pretty much handled all of those pre-market levels. And then after the halt, I would have been too nervous to play it, but it did end up going after the halt, which is nice. So yeah, on the 5, you're looking at a similar situation. Wick down into the zone to fill. You could have sold it up here for 50 cents or so, close to 40 cents. Then here at the open, if you did get filled, pop, huge pop. You could have taken it for a great move, obviously. But if you look at the 5, you see that you're getting a wick to fill through the zone. I mean, it did peak out, not a big deal. But yeah, on the 2, it quickly reclaims VWAP and breaks through VWAP in the 20 all in. This is 1 2-minute candle. So if you were in the move, you could have watched all of this happen in the same candle, which is really nice. So let's say your profit target was here. By the time you go to take profit, your price is probably already up here because it just launched. So you love to see moves like that because you can usually squeeze more out of them just because they move so quickly, which is nice. I ended up doing a second zone a little bit later up in this action, 6.72 to 6.54. Maybe that was. Oh, damn it, that was the same zone. Let me pull up my Twitch stream. I went and watched the Twitch video to get the levels. and then I wrote them down, but it looks like I just wrote the same one down twice. I will find it, I apologize. Okay, 788 to 756. So 788 to 756. So you can see that this one ended up getting filled to the cent. To the cent right here. Again, what are these levels based off of? I made these zones based off of these wicks on the 10, this body on the 10. Come over here and look at the same situation on the 5. Got a lot of bodies reacting here, wick reacting, reaction, reaction, another reaction. So that's how I base those levels. And you can see we've got a beautiful dip to VWAP, quickly reclaims. You come and look at the 5 and the 10. They look good. I mean, you're looking at, I was explaining on Twitch at the same time that, you know, you could take into account that as this 10-minute candle right here formed and took out this one, anybody who's playing a 3-bar play on this chart is going to take this play here with a stop loss here. So you can expect for, you know, if anything, at least a little push up for a quick scalp, but it ended up staying above it. The 5-minute chart looks great. Hugging VWAP. Staying on top of it as it continues to push up, breaks these new highs. I probably would have shot for this range, and you could have gotten easily a 50-60 cent move out of that. Even if you wanted to make it safer, you could have gotten at the very least a 50 cent, 60 cent move, 70 cent move, 80 cent, 90 cent, almost $1 all the way up here. And then if you held through that, you know, you could have had a $1.50 easy. So another really solid move in the same ticker. One thing that's worth mentioning is that I was talking about this on stream a little bit, but I have some people that reach out to me and, you know, they take the same plays entry-wise that I do based on, you know, my same entry criteria, but they, you know, don't scalp. They look for value entries the same way I do, utilizing the same method that I do, but they use my entries for much longer plays, and that's totally doable. You don't have to just scalp if you think that you can find a better application of just some of the things that I do to something that's more suitable to you. Then, you know, by all means, you know. Afterwards, I had this trend line drawn at the open, and we were discussing that, you know, after it broke through the trend, you know, sold off, it came back up, and I told Chad, I said, this is a good short position because you're going to get the 20 VWAP and trend line all acting as resistance here. So if I was a short, I would look to add, you know, probably here to there, have my stop somewhere like right up here, maybe even up here if you were feeling a little nervous about that volume or whatever. And you could have had a great short position for, you know, another $1 move or so right there. So we were really on top of this chart today, RMED. We did a really solid job handling that. AREC, now again, I didn't trade. This is all just stuff we talked about, and I was taking, you know, what would be hypothetical trades, I guess. AREC at 840. So right here. I drew a zone of 405 to 395. Is that right? 405 to 395. Oh, you know what? We were talking about a short. We were talking about taking this one short. That's what it was. Sorry. And it was up here in this action. So I was talking about after seeing this right here, this price action, you can wait for this next dip into this zone. You can risk this high. And you can look for a great short position on a ticker that's, you know, competing with its previous pre-market highs. You see that? Pre-market level, it came up, tested the pre-market level, pushed down, and then tested some more pre-market levels, pushed down again. So that would have been a, I was trying to explain what it would look like on the short side if you were interested in playing this to the downside, and you could have had a decent little move on that one as well. Not a whole much to talk about on the 5 and the 10. It's basically the same thing, just upside down, right? So you got what looks like a reversal pattern close to tweezer bottoms, both wicks interacting with VWAP before being pushed away. Good sign on the 5. 10 is not telling you a whole lot, simply because, you know, it's more or less the same as the 5. You got price respecting the VWAP here. You could have potentially tried to take this for a 3-bar play, entered at the break of this, made your stop here, but you wouldn't have taken a whole lot of profit from that, 10 cents or so. So I generally don't play 3-bar plays unless they're on, you know, like the 5-minute maybe. It just doesn't usually coincide with my trend strategies very well. But yeah, if you're scalping puts or actually shorting these small caps, that would be a good thing to look for. If you're just taking trades along, this would be a good thing to look for as either, you know, let's say you wanted to take this bounce down here and you got in like right there perfectly, you got filled and it came up. You can identify, like if I was a short, I would do, you know, what we just talked about. And in knowing that information, that you would consider this a good opportunity for shorts, I fucking hate this. You can do, you know, you would make a profit target like based on that. So I would have probably taken it right there. So sometimes it's helpful to know that other side, even if you don't trade it, because it can help you dial in some key information so that you don't get burned. Like you can take it long here, take it short here. And knowing that people would be looking to take short based on this action will tell you that I don't need to hold it through that, because the odds are pretty likely that if the shorts step in, it could go the other way. So that's why that type of information is helpful, even if you aren't interested in shorts or puts. So BNGO at 11:30 here would be right. That would be what, 10:30 my time. 11:30. Let's see where the zone lies up. 8:55, 8:45. Yes, that would be up here. 8:55 to 8:45. Yeah, it was this one. So we're talking about trends, trend strength, all that good stuff today. And we took this one right here. And right here. And you could assess that, you know, again, I tell people when you take zones a second or third time, you know, do it with half the size of the first, unless you're really confident in the move based on something. This is a lower low compared to this. You could be looking at a potentially, you know, dangerous pattern. I was talking about how I thought that this curvature right here was saying that there was a lot of inaction in price. Actually, I think we only took this one. So yeah, I mean, basing it off this trend line support, we have trend line support. We can make our stop loss right below it, so you can be risking 10 cents or so. VWAP isn't really in play here due to how low it was. It might have been somewhere different at the time. I'm not sure. I can't remember, but you would have gotten filled in full. Now again, especially based on these 10-minute levels here, you would have probably taken profit into these levels, which you would have gotten. You would have gotten at least the first one for a 20-cent move or so. You would have had to held through this pain, or, you know, your entry is still down here, but you could have added potentially on this dip back to the zone, depending on how you feel about the overall trend sentiment, but I probably wouldn't have, just based on this 5-minute candle action right here. So that was that. Again, you know, what do I love to see? I love to see wicks on the 5, respecting a key indicator or a key level. So our zone was placed perfectly over where the 20 SMA was. And as price came down and the 20 SMA came up, it met us right in our zone. And the 5 utilized it as buyers saw the dips below 20 as good places to enter and pushed the candle bodies back up above it for the close. You know, and had a decent little move. Now, again, you know, on secondary rallies after a high day, you know, you're not holding for a high day or anything like that. Make more reasonable profit targets because, you know, lower highs and stuff like that are good positions for shorts and things to consider looking at the backside of the ticker for the day. Another thing that's worth mentioning is how different this looks on the 5 than it does from the 10. So this action here I guess these few candles. Looks very different on the 5, right? So on the 5-minute chart or the 2-minute chart, you're thinking, wow, this sticker has a lot of range. But you come over to the 10 where all the information has been compressed and, you know, it's a little bit more fine and well represented. You can see that it's actually more of tight range with some curving, which tells you that that's probably the top of the move for the day, right? You got volume descending and price not moving a whole lot. It did wick up, did wick down, but ultimately these bodies closed in this rounding fashion, which tells you that it's either getting exhausted or there's not people interested in buying it up here, and there's not people interested in selling it down here, so it just kind of stagnates. Even though it does this on these lower time frame charts, this is a much cleaner picture that I'd like to base my assessment off of. And I did, right? So instead of trying to, like right here, if you looked at this and you were like, damn, I could get a good pullback, right here to here or whatever, and try to get in that move based on those levels and, taking a zone higher than you needed to or whatever. Whereas if you base it off these, I was able to make my zone based off of, this action here, this candle, this body, candle, stuff like that. So definitely, keep in mind that while it may look different, it's important to have the information that all 3 charts provide you. Because sometimes they can contradict each other or they can tell you information that the others are kind of hiding. Let's see, the next one was NEXT. Somebody asked me this. Somebody in stream said, what do you think about NEXT? And that was at like 11:30, I want to say. Let's see, 326 or 323. Oh yeah, I remember this one. So this one, we ended up making the zone for this move. And it ended up coming right down at 326. You wouldn't have gotten your bids filled more than likely. Maybe you would have gotten one. But, you would have taken a decent move out of it. If you did, you could have taken it again for a very small move. I mean, that's only like 6 cents or so. But the ticker range on the day was only 60 cents. So right here, you would have captured about 15 cents of the 60 cents on the day, which is a pretty respectable amount. It's important to keep, your thoughts on, how good or bad a move is based on the relativity to the stock, because you can't expect a stock that's gone from 286 to 344 on the whole day, like that's its whole range. You can't be expecting that ticker to make you $20 moves, right? Which is why we adjust position size based on our stop loss and all that kind of stuff. Again, you could use trends as a good way. The trend is the way that I identified this zone mostly, as well as the previous levels. I figured that if it did come down to meet trend line support, it would be right in this range, which would have been perfect. And it just didn't come down low enough, but that's okay. It's okay. And the last one on the day was Clove. I believe Alex came into chat. Yo, I still have it. Nice. And asked me about what I thought. So we actually caught this move here. So it came down. Again, secondary rallies. You're not looking to hold for highs a day. You're looking to take reasonable profit targets. So we would have scaled in full. We got trend line support filled. We were 1 cent off of perfect zone fill. It pops up here, breaks through first area, breaks through the second profit target. You could have taken that for 25 to 35 cents, easy. And that gave you trend line support that had to fail. You could have had a tight stop of just about 15 cents. So you're looking at it easily a 2-to-1, potentially 3-to-1 risk to reward, which is pretty good. You could have even raised your stop a bit to like this action here and had like less than a 10-cent stop, because that would still give you the forfeiture of the trend line support, which is a good place to be stopped out. I think that I had moved it down here simply because I didn't want to get accidentally wicked out, since this is a little close and the ticker has decent range, you can see. So that was that. Again, 5 in the 10, telling you the same old thing I love to see. A wick to fill the zone, immediate reaction away. The 5 has what looks to be a reversal style move, at least short term. Big selling candle, bouncing green candle that takes up half of the selling candle, telling you that there's still a lot of strength there. And then it does round off here, and eventually, goes back to test and ultimately fail a trend line support. Now you could have, oops, I wanted this. Played it longer into the day. You can see how that same trend line pretty much, was respected all day, or traded within it. Yeah, and you could have taken the zone later, obviously, for another great move. But I was already done for the day at that point. But yeah, it's worth looking at. We do share a lot of good information on my Twitch. People ask me questions, and I'll talk through it live. We talk about making zones and strategy and all that kind of stuff every day, it seems. So if that is something you're interested in, I'll link that in that link in the description or whatever. But otherwise, yeah, short day of review simply because I didn't actually trade it. I just made the zones the same as if I were to trade it, and then we talked through it as they were taking place on Twitch, since I wasn't actually in any position. I'm hoping that we are good to go sooner than later on my Webull account, because your boy wants to trade, man. I want to trade. We've been, I would have had a solid day today with all those winners if if I was able to have actually traded today. But the way that it works is when you move from cash to margin, you got like 6 days where it says 6 days where it's doing that conversion, and if at any point you trade during that 6 days, it resets it back to the 6 days, and you got to start over. So I'm being very diligent about not touching it until I absolutely know it's ready. So it'll be worth the wait. It'll be worth the wait. Being over PDT, having leverage, having margin, all that good stuff. But yeah, that is it. If you guys have any questions, you're obviously always able to reach out, and I will see you guys tomorrow, hopefully for a really strong day. Another day like this would be incredible. And I hope that we're taking some good steps on the way to a really strong week. So be well, everybody, and I will see you tomorrow.